DMart went public at 650. Everyone said, boss, great company, but very expensive. At 800, don't even think of buying it. 1000, are you mad that you are buying DMart? At 1200, the world made fun of an analyst who came out with a 10-year view on DMart. At 1600, people are buying it. Mr. Damani offloaded his stake because of that listing norms, SEBI requirement, and 2 days some fund manager bought it. Yeah. So what is going on here?
So there are 2-3 things.
Are you buying DMart?
I'm sorry?
Are you buying DMart?
No.
Okay. Chalo. Now let's understand your theory.
Okay.
Maybe he's already done it.
Yeah. So in the fair disclosures, I had applied in the excuse me retail category in the IPO, and I was lucky enough to get an allotment, which I am still holding.
Okay.
Coming back to your question, as I said, there are a few things. One, of course, the phase of the market. Now, in last 5 years, we are in a phase in the Indian market, which largely has been positive, bullish, whatever we call it. The buying has been far more than selling. So that's one. Two, of course, as they say, market can remain irrational more than you can remain solvent. So that applies more on the bad companies or on the selling side, but this is a case where you can keep taking a view. Third point, not only this, there are some other good, fundamentally strong companies also, wherein if one looks at that magnifying glass of the valuation now without any investment recommendation, so that I am clear, I am taking a few names, say Page Industries. Now that stock trades 65 times 2 year forward. So it's not only DMart, there are other examples also. There is Bajaj Finance, the valuation of that also is not cheap. Of course, all these companies, one good thing is that they are justifying it by reasonably good fundamental. Now, whether this level of valuation is justified or not, I think it's a difficult call.
Okay, the second stock which I have on my radar or our radar is Dr. Pathlab. It's moved independently of what other Pathlab companies have done. It corrected in the mid-cap selling stampede, and then the recovery has been very sharp and very heartening. Dr. Pathlab, again, it's a differentiated business model. When I say differentiated business model, they are not like the mass market company where they're trying to do what ThyroCare has done, where they're trying to be the cheapest and the most affordable diagnostic company. They are saying that we will focus on specialty diagnostics. It may not be a very high growth business, but it is a very profitable business. Sandeep, whether it's healthcare or diagnostic, the big picture argument always has been strong and supportive. But diagnostic and healthcare, and when I say healthcare, hospital companies, they've seen their share of good news and bad news. Would you like to buy a diagnostic company as part of a portfolio for next 2 to 5 years? Do you think between ThyroCare and Pathlab, one should own one?
Yeah, so I think 2 quarters ago, Dr. Pathlab showed the first signs of turnaround, and at that time the stock had underperformed significantly. So that's the time we took a very small exposure, and we have not bought since then, and the stock's actually done very well. So so I would have liked to own more, but then the stock's shown a run up in spite of the mid cap carnage and has continued to trend up. Even the current quarter results and outlook seem to be positive. So I don't know whether the stock can correct or not. So I would think that it should be part of the portfolio, and Dr. Lal's Pathlabs is a much better company than ThyroCare in any case. So I think this should be part of the portfolio. The price is something which we have to get a better price entry level, that's all.
IDFC, that's the other stock that is on our radar that's been seeing some very strong gains. It's managed to climb to a 3-month high. The volumes as well have perked up quite a fair bit. And this amidst news which we at ET Now told you exclusively, the fact that Avendus is actually the front runner to acquire IDFC AMCs and broking units. Now, this deal, as per our understanding, should happen within this week itself. And you have been seeing the stock gain quite a bit of traction in the run-up to this announcement, as we understand should happen in just a matter of days from now. Of course, when we did contact both IDFC as well as Avendus, our queries went unanswered. But that is what we are picking up from our market sources, that a deal like this is brewing in the works. Kunj, wanted to get your take on IDFC.
So, in my view, I don't think that the selling of broking as well as asset management unit are any value contributors to the IDFC bank. The case here is one of a significant underperformance over the last 3, 4, 5 years, and going forward its merger with Capital first, and then the future business, how it shapes up. In fact, just to go back to my previous point, why I am saying that the selling of the AMC and broking unit is not value additive. It is the same IDFC which had bought this AMC unit from Standard Chartered, and I do not remember, I think they had at that point of time paid some obscene amount of close to 1000 crores. So, I do not know, I have not looked at the numbers, but has that 1000 crore given them any IRR? The same way, depending on what price the current buyer pays for these units, it will remain a question, because the whole AMC business has become top end heavy. Only the top AMCs are the ones which are making money. There is a complete long list of tail which are continuing to lose money.
Well, we understand that, you know, the deal size, that's the combined value could be about 5,000 to 6,000 crore rupees. So, hopefully, it's being struck at a premium.
So, then buyer beware.
Yeah.
No, buyer beware in HDFC AMC also then. That's like 10, 11 times the AMC.
Very well said, Nikunj. So, yes, that still applies, but then it goes back to our point of valuation which we were discussing for DMart or Page. HDFC has a pedigree, it has a name. And in fact, let me also link it to the fact that HDFC, besides the AMC, had come out with its insurance unit IPO about a year ago or so. Now, that IPO has given phenomenal returns compared to the other insurance IPOs which came in. So that's also the reason. There it's a proven pedigree of returns.
Okay.
CK, airlines? Yes, no? Fly them but don't buy the stock.
I think currently there is some sort of differentiation. Jet is rallying on very different reasons compared to what is going on in Indigo, and SpiceJet is doing something of its own. So there doesn't seem to be an aviation kind of move, so to speak, but it seems to be largely sectoral oriented. Lower oil prices certainly help in the short term, but I think there are too many other headwinds blowing across, particularly for Jet. SpiceJet seems to be meeting up with a lot of profit taking type selling and refuses to get up even when the others are started rallying. It's only Indigo which is among the three which is on a significant outperformance. Jet has a lot of catching up to do, so I really wouldn't get supercharged with emotion with Jet's recent move.
Okay, just about 2 minutes to go before we hit the pre-open rates, and I want to quickly mark and revisit the top 5 factors to watch out for in today's session. India is of course outshining global peers, tops FII buying list. If you just draw a weekly comparison, I think that pretty much tells you the story that India is pretty much at the top of the pack, whether you compare it to the Asian markets or you also compare it to what the US market, especially the S&P 500 have done in the week gone by. So, I know it just misses the headline sometimes because we're so focused on individual stories, primarily what's happening with the currency, but on balance, we have still managed to show resilience to the rest of the region and to the rest of the world markets back. You have Brent posting its third weekly dip on Friday. That's good news. I mean, if Brent was higher and the rupee was weaker, that would be a double whammy for our import bill. So we can take what we get, and we should be grateful that at least oil is not giving us our macros much trouble as we step into trade this week. Infosys CFO MD Ranganath resigns, and that will be a bit of an overhang for the stock sentimentally. I don't know how much will the market read into it, but on balance, on ground with the financials, it doesn't reflect any immediate impact. L&T to mull first ever buyback on August 23rd, and it's going to be an interesting talking point all day long because L&T as a stock, despite fundamentals looking very strong, their order book inflow improving, has not, as a stock, it's not given the kind of returns that one was anticipating this engineering major to deliver. And then of course it's retail and retail all the way this morning. You have Amazon eyeing Birla's retail and Alibaba eyeing Reliance retail, a 50% in fact buyout there, and that'll keep just the entire pocket very excited.
Well, the big one is Alibaba eyeing a piece in Reliance retail. And Kunj Bansal, what is going on in the entire retail space? Alibaba is talking to Reliance. We know that Amazon, Google are talking to future retail. There is a buzz that Amazon has already picked up 5% stake, I think, in Shoppers Stop. Why everybody is so excited to own the retail space in India?
I think it's a case of growth that they see in the Indian market. Of course, the question alongside is of the profitability. But at the same time, if one leaves the profitability part aside for the time being, and I am sure these are global giants with deep pockets, so they do look at really long term, which is what we say that the equity investor should look at. So they are looking at a not even 5-year, I think a 10-year horizon. Some of them already have a decent presence in the online space. They do realize that probably Indian market for the few years to come will continue to remain an offline market as well. So they want to create a presence wherein they are present in online and offline. I am sure at the back end they must be thinking of drawing out synergies from the logistics, supply chain, sourcing and all that. Not only that, it's a question of being there also. You know, a lot of times you have to be there, because whenever an opportunity is thrown, that time you may be too late to prepare and come if you want to. But if you are already present, you just lap up the opportunity. The classic case being demonetization. Now, nobody knew that was coming in, but whoever was there, the wallets, the electronic wallets, mobile wallets, they immediately took benefit of that situation. I think that's where these companies are taking that view.
Just want to quickly mark what's happening on the currency, because this is a very, very big move, and remember it's coming in after a day's break, because on Friday you had a bank holiday, or money markets were shut on account of the Parsi New Year. So coming after a day's break, after hitting well past that 70 to the dollar mark, you're seeing a significant cool off of 36 paise come in on the currency, as opposed to Friday's close 69.79 on the currency. So seems like, at least for the near term, that weakness has abated us. Definitely. But Sandeep, you continue to believe that the currency, while it may be a 35 paise weakness, but weak it still is, would continue to be and act as a tailwind for IT as well as some of the select pharmaceutical names too.
Yeah, so I think it's a positive, but I think incrementally just the rupee cannot drive the stock prices higher, because a large part of that has already got built into the stock prices. Now a further fundamental up move in terms of business prospects improving is something which investors will be looking at. So I would think that a large part of what the rupee can deliver into technology stocks specifically has already got built in. In case of pharma stocks, obviously there are some companies which are showing a good comeback, and I think Sun Pharma, since the time actually we got in, it's already up around more than 30% now, because that was a clear contrarian buy below 500, and results were also pretty good. So I think that's one stock which and company which could continue to do well. Otherwise it's a disparate set of performances, but overall I think the pharma space is bottoming out, and Dr. Reddy's, Sun Pharma, all of these two stocks specifically, and at some stage Lupin will also come back. So I think that these need to be on the radar of investors.
Betting big on pharmaceuticals. Sandeep, good to have you on the show. Thanks so much for taking the time out. Time then for my Rise with India stock idea, and he has market veteran A. Balasubramaniam of Aditya Birla Sun Life AMC. He's pretty bullish on the banking sector, believes that the worst is over for corporate banks, as the government and the heads of the banks are working in tandem to resolve the NPA crisis.
Some of the banking sectors, the way I think these were showing numbers, especially with a strong feeling that is coming and worst is over, especially around the NPAs and the way the resolution is coming, and the way I think stocks are performing actually in the banking and financial service sectors. I think that's actually building back the confidence, which actually missing piece about a quarter back. The incremental demand is coming for the corporates, either for your M&A purpose or for the purpose of refinancing your existing loan. And given the fact there is one segment of the banking industry is cutting down their lending activities, there is another segment of banking sectors actually is increasing their lending book. So that's why I think the differential, the approach of these two banking system actually is benefiting. On the NCLT, I think we are quite confident the way I think things are progressing after finding a resolution for at least 3 companies, including the Bhushan Steel, which got finally closed. And that's, I think, something seems to be increasing the confidence that worst could be over actually for that. But having said that, I think the way I think this is being projected is that as we move forward, there could be some more provisioning. While one can of course keep saying all the time that there will be more provisioning to come, at the end of the day we need to also of course draw a line. Actually, those sectors which have been built for the purpose of building long term the benefit of the country, like such as power sectors, one has to also find the solutions. I think there seems to be some step that is being taken by both the government as well as the intra-credit arrangement that the banks are working on.
Well, clearly sending across a message that worst might be behind for banking sector. Yes, there might be provisions going ahead, but now is the time to concentrate on the growth rather than just looking at the past where NPA numbers have been giving a chill to this sector. Bala, they're bullish on banking space. Couple of stocks which I want to discuss from futures and options segment. First is Raymond. Now 5% rise in open interest with rise in price. Now that's not a big observation, but what's happening in cash market is very interesting. Very high volumes, and after this stock is in a downtrend from 1150 odd levels. It has corrected to current levels. That's a huge correction, and now in this correction, this up move has come, and first time after quite some time, this up move is backed by very strong volumes. Now, if you correct all the highs of last 3-4 months, you will get a trend line which is downward sloping, and if stock price moves above 810, then that correction or that trend will seem to be over, and F&O built up long positions, cash volumes are high on the rise, clearly suggests that it is quite possible that may happen. So that's one observation. The second observation is in PNB. Now I understand this is one name in PSU Bank which everybody wants to be away from, but there are some important developments which are taking place. Beginning of August series, around 82, 81, 83 odd levels, we saw huge pile up of long positions, and then again there was some news related to PSU banking space and stocks did correct. That correction was not backed by any formation of short, and volumes were also not very high. And again in last 2 trading sessions, we are seeing that PNB is adding long positions around same those 82, 83 odd levels. So there is long accumulation taking place in PNB. So that is positive, at least from statistical front. Coming to the index trades of our experts, all of them are bullish, but some different indices. Kunal has changed his stance. He was shorting Bank Nifty. He is now bullish on Nifty with a target of 10,565 and stop of 10,440. We also have trade in form of bullish trade in form of buying Bank Nifty. This is second consecutive trading session, if I'm not wrong. CK is bullish on Bank Nifty with a target of 27,900. Actually, the target should be 28,450 and stop loss 27,900. And we also have Manas, who has been maintaining his bullish Nifty stance, and now for next 2-3 days he is anticipating that Nifty can move towards 11,600 with a stop loss of 11,409.
Well, about 2.5 minutes left, about 3 minutes left, and then we'll get the first rates, and nothing significantly damaging has come out over the weekend, if at all. Markets are now gradually realizing that Turkey is going to be an isolated problem, and the Turkish lira has recovered very smartly, at least in last 2 trading sessions. Kunj, what are you buying or selling in this market?
I think few things. One, of course, as we all know, we have seen the large cap indices are almost at life high, close to the life highs. Of course, that movement has been led by concentrated stocks, and it's not a well diversified participation. The movement has been led by select financials, select IT, select consumers, and few others here or there. On the other hand, there is a mid and small cap space which has seen sharp beating. Now, within that, of course, there is again a separation that some of the quality mid caps have not corrected, but at the same time there are others which have corrected as well. So that is where the result season is largely over by now, and having analyzed that, some good buying opportunities indeed have emerged. The question of valuation still remains in this market, whether you find them cheaper or not. But for a specific answer to your question, the stock that we are looking at is TTK Prestige. The company gave a reasonably good turnaround in the last quarter, and the outlook now going forward seems well. As I said, valuation still remains a concern, but if we look at the valuation of this stock vis-a-vis its closest peers possible, it's still trading cheaper compared to the others. So while as I said, closest peers in the household appliances, electronic goods are trading at 40 times plus forward PE, this stock is close to 34-35 times forward PE.
And just maybe the damage that's going on in Kerala right now could be a big opportunity eventually, just rebuilding the state, and you could see an increased demand for products from TTK Prestige. But CK, a quick chart check as well, considering Kunj has got that conviction buy on TTK.
Well, I would think, TTK has been one of those stocks which has been extremely well patronized by the market. Given the fact that the prices are little high, it does not really meet up with the buying from the small investor, but it is the more determined set, the more knowledgeable set of the market, which generally patronizes stocks like TTK. In the recent times, the stock has taken a beating, and it's actually staging a recovery at this level. So this price level at which it is trading at might not seem too expensive in the context of what has happened in the last 1 year. So I would believe good news at this level can actually buoy up and produce a rally. So it seems to be a decent low risk bet at the current levels also.
Well, let's take from CK. Interestingly, two stocks are poised, against each other in different direction. L&T because of buyback news, and Infosys because of CFO resigning. On this buyback, Nikunj, we have seen so many large cap companies, so many mid cap companies also announcing buybacks, and we are seeing that markets are not at lower levels, at all time high levels. Is it it might sound very pessimistic, but is it like corporates are not seeing any great opportunity to deploy money, and hence there are so many buybacks happening across these sectors?
See, the large buyback has come from IT, and IT companies have been criticized in the past for conserving cash and not doing anything. So what IT companies have done, I guess, makes complete sense, because a buyback will not only act, a buyback has acted as a back support, and it has changed the return ratios. Then the second big buyback was from Bharti, and that because the promoter dividend definition and the dividend taxation definition changed a couple of budgets ago, and then some of the promoters have done that. Why L&T is doing that, I guess this is in line with what they indicated. Laksh, I think, is what they said, that we would be looking at divesting our non-core businesses, our subsidiaries, and using the cash back, and we would like to give it back to the shareholders. Now, I don't think a company like L&T would be giving a buyback because they don't think there is a growth capital problem, because L&T can easily raise capital. They got a lot of net worth. This buyback, I don't think is going to be like a $5 billion buyback. This buyback would be a measured buyback, but it is in signaling coming from the management that they think that there is value in the stock. L&T, unlike in TCS, is a professionally owned company, so there is no benefit of an individual shareholder here in terms of a buyback and trying to save tax. But a buyback coming from L&T, which has not happened in the past, it just tells you that the professional board feels that there is a upturn. I would be optimistic rather than pessimistic, and rather criticize L&T for giving cash because they don't see growth. Kunj, yes or no?
Yeah, I think you covered largely quite a lot of points. One, of course, in this case, there is no specific promoter, but the trend of buyback has clearly been seen to have increased in last 2 years when taxation was increased on the dividend. I mean, increased in the sense that further increased. So that has been clear trend. Two, yes, of course, we know that while the private sectors has a lot of capital, but the growth opportunities is not there, or rather, it's not that the growth opportunity is not there. The capacities which they set up in the previous economic growth cycle have been lying underutilized, and that's where. In fact, let me also put across a data point here that FY18 has seen a 40% dividend payout. Now, this has been higher than all the earlier years. The general range has been 25, 26, 27% kind of dividend payout. So that shows, in fact, this answers two questions. One, that there is no lack of cash in the economy. So if at all there are growth opportunities, if at all there is a demand growth seen to be coming in, and which is where now in the recent past we have seen the capacity expansion announcements coming in from steel sector, from cement sector, from some of the automobile companies and some of the consumer goods companies.